Welcome to Markets Now. I'm Michelle with Scott Varlick of Koima Varlick, and we're seeing mostly lower prices over on the grains to start off Friday, and corn might be the one exception, trying to hold some slight gains. Livestock futures to the plus side. And Scott, thanks for being with us. It has been a roller coaster of a week, hasn't it?
Yeah, thanks for having me. And that's for sure. Seatbelt on with the ups and downs.
Bag. I've been on the road this week. We were at Commodity Classic, and I thought I should be taking those puke bags out of the airplane. So
for sure, need some Dramamine or something to trade these markets. Yeah. But I mean that's what we're seeing, what we're getting used to. I think over the last week or two, it's been what I know, what I feel like I know. Whether you're a bull or a bear, just kind of gets thrown out the window, and we're just rolling dice, flipping quarters, trying to figure out uncertainty is winning over in these markets, and the volatility is there. So yeah, we're having to get used to it a little bit. It's a little reminder of the last time when Trump was in office. So I guess we're kind of starting to get used to that. Hopefully we can get some of that behind us and start to look back at some fundamentals, I guess, is the ultimate goal here.
And I guess that was my question. I mean, we should bring people up to date on the tariff situation. Obviously, we rolled back the tariffs for another month on Mexico and Canada because of USMCA. But when does the market become numb to all this? When do we start going back to just trading fundamentals like you talked about?
Yeah, and that's a great question. I think that's pertinent information to kind of talk about is, okay, now we've rolled these tariffs back again. Now we can kind of recover. We saw, a nice steady rally in some of these markets to start the month. And as we got closer to the tariffs and the threats, we took a lot off real fast. And now that we're rolling them back a month, markets recovering, trying to see, okay, how far can we rally back? What are our retracements? But we're going to start to get used to this a little more every time. So, I mean, as we move forward, we can start to maybe get a little sick of that and start to look at fundamentals and say, okay, we've got tight ending stocks in corn. Okay, we've got, maybe some tighter numbers in hogs and in cattle as well. And demand is okay. So some of that stuff's going to start to win over. And I think that's good. You and I had talked earlier. It's, similar to the Russia-Ukraine wars. When that first came out, wheat was on the charge, made it to $12 and then all the way back down. Well, that war's not over. It's still happening, but we've become used to it, and it's just become a little bit more of a norm. So as more time passes, I think that's good for us as we can kind of get back to some more stability in these markets and hopefully, slow down some of these major knee-jerk reactions that we're seeing on the markets.
I have to say specifically about the cattle market, the Dow has taken, the financial sector has taken a big hit this week, and the cattle have held up pretty well through all that, don't you think?
Very well. The stock market has been on a big break, and we can be very susceptible to what's happening over in the Dow, the S&Ps, and cattle can follow. Haven't done that so much. I mean, the stock market hasn't really recovered yet. It's still on its break, and cattle are trying to find some firm ground and move higher. So it's good right now that we're disconnected, and I feel like a lot of that can just be the time of year that we're in. We're sitting here in the middle of March. We're going to start buying for peak demand season, and I think these packers are going to need some cattle. So I think that overall picture of where we're sitting in the calendar is helping us fight some of that off.
Yeah, we have not had a lot of cash news this week. It's been pretty light, hasn't it?
It's been very light. There was some, maybe a little 197 in Kansas. We had some 197 bids last week. Some of those packers are bidding 198 this week, and some guys have taken that. It's a great price. It feels good to be moving some of these cattle along. We've got some winter weather out here, but I do think some of these packers need cattle. They've been slow on the negotiated cash trade. They're pulling from formula cattle, from contracts, and slowing down chain speeds, trying to be dark certain days. We kind of have some of that behind us to where it's almost time to get rolling again, just because it is the middle of March. So I think there's going to be some strong interest from packers, and we have a chance to get some of that surprise higher cash trade here. Possibly next week. Maybe we even start to get some of that after the close, but I think the futures are starting to sniff some of that out as we're seeing the strength in the April contract, getting above where some of these cash prices are and not scared of it. right during a time when we've got funds rolling out of April and it's still trading pretty strong. So hopefully that's it. We've got fundamentals kind of entering back into the picture here.
Yeah, because you said the Goldman roll has started, so that's part of what's going on. But April is back above the 100-day moving average. That's been a pretty key line in the sand, hasn't it?
Yeah, I think we're all looking at these charts, trying to grasp for straws during this. Is it a head and shoulders? Or take out the neckline? We have a two-day break, and now we're kind of back up through all of that damage that we just left and getting above the moving averages, and you're starting to feel okay again. So I think the charts look like, hey, we're trying to put a little bit back on. Halfway retracement on an April cattle would be 198.50. So that would be the next target for a little bit of a bump of resistance there. But it's good that the bull spreads are leading again. The fronts are on the charge. That's a great sign. But earlier in the week, we did have some of these deferred feeders made contract highs. You're right up against some of those contract highs. So there's still some optimism left in these markets. And that was the highlight, I guess, for this last week was some of the strength of those feeders.
Yeah, but some of that, do you think it was due to the pullback in the corn market to some degree?
Some degree, yes. That definitely could be part of the picture. But if we're looking at heifer retention happening now and seeing some of those heifers, I thought maybe it would be front month that would lead the charge. But seeing those deferreds, hey, that gives us that little bit of hope that, hey, we're still going to be at some high prices for a while. Yeah.
Yeah. And the tight supplies would certainly bode well for that or would push that. Okay. The hogs have been on the roller coaster ride here, the tariff roller coaster, but funds have liquidated some. Cash trade and cutouts haven't necessarily fallen apart. So where does the market go now?
Yeah, at the mercy of the tariff war. We're all going to get sick of saying those words, I think, over this period of time.
I'm already tired of it.
believe you. Getting a nice recovery here off the lows. So you look at that, say, okay, now that we're kind of making up with Mexico, making some headway here, push the tariffs back, we're party back on again. So I think there's, just fundamentally, there's a large number of people that think we can have summer hogs over $1, hand over them by a ways. And the only thing I would point to is some of those options, some of the calls, on that break, they never really lost a lot of value. They held on pretty well. So I still think there's that hope that upside is possible. We can still have some good cash cut out, in front of us. So now we're kind of feeling okay again. These summers are right knocking on the door for $1, and I feel like they can get back above it and continue to retrace. I guess we'll give it a couple weeks into the month until we get, closer towards that April. Are the tariffs going to be back on again? And so as of now, I think we're okay here for the first couple weeks of the month.
I do want to point out yesterday on the export report, Mexico and China were number 1 and 2 in terms of buyers for pork. So I thought that was encouraging anyways. All right. So the grain market, everybody wants to know, we've recovered off of these lows here from the big pull down. How much can we retrace here, do you think, in the next few 30 days until the next tariff wave comes?
I think it's got a nice chance to recover here in the beginning of the month, especially on the, some of these front months. With fund liquidation, we just saw, I think, July contracts take too much abuse during some of this break. That's the contract that should have been, holding because we've got tighter stocks right now. And it's maybe the new crop kind of stuff that still has a little bit of worry on it for me. But seeing some bull spread action here, I think that bodes well for it. If these funds get a little bit of confidence, I think we can put some more on. I don't think it's just a 2-day rally. I think it's maybe a couple of week rally. But when we start to get to towards the end of March, that's when we have to start to turn the page. Okay, what's this acreage report that's coming out here? Okay, start to digest some of that. And that's where I feel like, I can't wait to kind of get to there, some new news to kind of trade, because it was too early to trade a drought. I get that question, often over the last month. It's, during February, I'm like, okay, we can't really put drought into a market in February. Yes, we're dry, but it's not really the time of year that I can stand on. So for me, I think we've got another, possible 20 cents. Maybe we'll get back to that $5 mark on the July. I think that's absolutely possible. And then we'll have to decide, once we start arm wrestling over acres.
Yeah. And there was a lot of buzz at Commodity Classic about not only USDA is 94 million acres on corn, but I heard people saying 95, 96, 98. Yeah, it was crazy.
Yeah,
So
I'm really feeling higher. I mean, that's what I hear, from producers. I mean, it's corn heavy. So that's the case.
okay, we'll see. All right, thanks so much, Scott Varlick with Kramer Varlick. That is Markets Now.